The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. At the break, we're going to have Norm Winsky from Astro Trend as our guest. We'll start out the day like we usually do, looking at the DAX index. And as you can see, it's been in a consolidation mode over the past several days with a little bit of a bias to the downside. And of course, it did complete the last pattern pretty much spot on. So we're just waiting to see what the next leg will bring. It's certainly different than what's happening in the U.S., but that is how you make a chocolate cake. Anyway, let's take a look at the reason why we always try to think in probabilities, folks. I had several questions over the past several evenings about this, and I just wanted to bring it to our attention. First of all, we're going to start out here looking at the crude oil market, and then we're going to quickly go to the gold market because, folks, we've got something big starting in this gold market, but we'll get to this crude oil first. When we're doing pattern recognition, you're dealing in probabilities. In fact, you're dealing in probabilities no matter what system you're trading, whether it's a 200-day moving average or a stochastic or MACD or Williams percent R. It could be anything. It's all based on probability. And the reason for that is you never know what is going to happen next, and you never know how much money you're going to make on a trade. Those are the two givens that we know for sure. So the only thing that you can control is the amount of risk that you're looking at. Now, as we look at this crude oil chart that goes over the past month, you'll notice that we have this large ABCD pattern that's giving us a number at 48.75. We have another ABCD pattern that's giving us a number at 4,800. And we have a third ABCD pattern giving us a profit or a price objective of 47.75. So we have three of them, and they're separated by $1 a barrel. Well, $1 a barrel is a considerable amount of money in the crude oil. It's $1,000. What we're looking at is what's happened to the market since it made its bottom back on the 23rd. It came down and made a perfect ABCD pattern. At that point, we have several things to tell us that this should be a bottom. And as you can see, back on July 7th through July 11th, we tested that bottom 3 times. It was a very nice little head and shoulders pattern. And from that level, we've started up, and now we should be culminating. And it's my opinion, we're trading around the 47.50 level right about now, is that we should make the 48.75. And the reason why I say that is the fact that it's the stronger trend, and it also has the larger 1.27 ratio up there at the 48.75. There's be a little bit of resistance maybe at 4,800, but that's what we're watching. We said yesterday, we pointed out the fact that the heating oil has already made this objective. Let's try that again. It was the gasoline futures that made the ABCD pattern already. Now, I still think we're going to get this level in the crude oil, and at that level it would be a sale because you're going to have several ratios to tell you that it should stop at that level. But again, it's all based on probabilities, folks. Over a period of 100 trades, you should be right about 65% of the time. The other 35%, 15% of that will be break-even trades. In other words, trades that started out profitable and you raised your stop to the break-even point to protect your risk. And then the other 25% would be trades that just flat out don't work. And most of the trades that you do with pattern recognition don't work right away. I mean, the losers will be out right away. I mean, it's bada bing, bada boom, and then you'll move on to the next one. So just remember that everything that you're dealing with in these markets is certainly based on probabilities. That's really what we're looking at today. So keep a close eye on this, as it's very, very important as far as the probabilities of winning and the probabilities of losing. That's a very, very important thing, to look at. Well, let's switch over here to the gold market for just a second. And this is what my game plan was in the gold. We'll see if it'll fulfill, or we're not sure yet. We've had a big move in silver. Silver's moved over $1 an ounce now in just a matter of a little over a week. And that's certainly telling you that silver's made a major bottom. And what I'm looking for now is to buy that first ABCD correction in the gold market if we get down to this level around 1233. That would only be down $11 from the high, but the last correction we had was only $11. So let's watch this very closely at the 1133 level, and we'll see that that it'll keep working in that direction is what we'd like to do. Right now, the gold is trading at 1241, so we'll watch it very, very closely here. Now, we're having a pretty big move in the bonds here this morning. We were looking at this sale at the 153.30 level. And believe me, if we get much above 154.22, this would certainly be a failed pattern. What we're watching here, of course, is what's happening with the Treasury notes, folks. The Treasury notes are making a 61% retracement. We're not quite there yet. We need about another 3 or 4 pips in the Treasury notes to make a perfect 61% retracement, and that would equal to what we're looking at here in the Treasury bonds. Remember, the bonds have a little bit more volatility, but the notes are much larger. They're 5 times the size of the notes as far as the open interest and the volume that we have in here. So we're watching this real closely here in the note market. So we'll just keep a very close eye on it, and we'll see what happens from these levels. Okay, the next thing we want to talk about, of course, here is the stock market. We're screaming up again. We have exceeded just about every single objective. The only thing that's left outstanding that I can see is on the S&P at the 2481 level. 2481 is a 1.618 expansion on the daily. That's the last one. The number that I was looking at in the NASDAQ, of course, was 5922. We're trading at 5937, 15 points above that. But we do have these cycles coming in this week, and whether they mean anything or not, I'm not sure. But this is how markets usually end. They don't start this way, so I don't believe this is a start of a new leg of any magnitude at all. And I still think the best thing to look at on the board is the volatility index, and that most probably will be in new low ground anyway. So we'll watch that one, very, very closely too. So we'll just keep a very, very close eye on that. But watch the gold, folks, at that 1233 level per ounce. If we get there, that would be a very, very good spot to take a look at this. I'll post this chart for the notes. We'll be right back after these few words from our sponsor.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White Services. For all the details and to sign up today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we have a special treat. We've had a request from one of our favorite people to take a look at American Express. We're going to start out by looking at it on the weekly chart. And as you can see here, we are looking at a 78% retracement on the weekly chart of American Express. Look at the time period back in 2014, folks, where we made the three drive to a top pattern back in June. You'll notice the stock dropped in half, from a little more than in half at that level, and now has rallied back 78% of that move. However, if we take a look at it, let's look at it on a daily basis. You'll be able to see this a little clearer because this will tell you that you're at the proverbial moment of truth here in American Express. If you take a look at this, you'll notice that you'll see this is the daily chart for the whole year and a half. But if you'll notice the top that we made, that's the 78% retracement on the weekly. You see, we've made that twice. We made it about 10 days ago, and we just made a new high at 85.93. So that tells us that we're there. But notice the 1.618 expansion number from the move from February to April. That also means something. So you've got quite a bit to tell you that there's should be a lot of resistance here at 86 here in American Express. It'll probably open at 92, but this is what it looks like, from the long-term and shorter-term view, is that we're pretty much should have completed this move because we're right at the 78% level of that 100% drop that we had 2 years ago. Anyway, that's what we're seeing here in American Express. Now, whether that's going to mean anything or not, we'll have to wait and see, but that's how the numbers point up. You have a 1.618, that would also be a double top, and then you also have a situation that you're exactly at the 78% level on the long-term weeklies. So we'll be able to see if it's going. I don't know where American Express is trading this morning, but we'll have to see, what happens with it. But this 86 level should be some pretty good resistance. So it's trading at 84.60 right now. So that's down about $1.20 from that level already. So whether that, now if you sold it there, I wouldn't risk more than $1. I'd put a stop at 87 and let her rip to see if it's going to work. But a lot of the numbers come together. Now, the next one that I wanted to bring to your attention was I had a question about breakouts. And one of the things that we talked about last week, of course, was the breakout that we were looking at in the Australian dollar. And if you look at this chart, this was the valid breakout. Now, the reason why we were talking about this valid breakout, you'll see the trend line that we have put in here since last May. So that's well over a year and 3 months. We took out that trend line, but look how we took it out. We took it out with a whole lot of gusto. And you'll notice that the ABCD pattern that we're measuring to, the ABCD pattern measures up to the 79 and change level. So that's what you're looking at when you see these valid breakouts. When you see these wide thrusts and breaking through the lines, those are the ones that are really valid. The ones that are just up there, just kissing your sister, and I love my sister. Yesterday was her birthday, but anyway, let's get back to the program. Anyway, look for the strong thrust on a breakout. That's really what we're having. We didn't have that strong thrust on the gold. We did in silver, but we did not have it in gold. So I'm still very bullish on gold. I'd like to buy the first correction, and I'm certainly waiting for that correction. I'd like to see that. But let's get back to this Australian dollar and see what happened after the breakout. Because as you can see here, we broke and we went all the way up to the to this 1.618 expansion. It was also 1.27 expansion. So at this level, there's also an ABCD here since last May, or this May. But we'd be watching for any correction now to be a buyer in the Australian dollar, because this has had a lot of thrust through here. But remember now, we are up like 11 days in a row. So that in itself is an outlier event. So what you'd want to do is to just sort of wait and see what the next correction is going to be. Now, the euro got below the 115 level, and then the report came out this morning. I don't know exactly what it was. It's the one that made the bonds move, but it actually had a situation where we've hit the 61% retrace. In fact, it went a little above the 61% retracement back. In other words, we dropped over 100 pips, and then we rallied back 70 pips, and 70 is the harmonic number in the euro. So the euro should have some pretty good resistance at this 115.65 is what I would be looking at, and that's we're trading at 115.52 right now. So we'll see. We went back to the 78% level. We hit it exactly at 115.68. We're trading at 115.49 level there. So we'll watch this as we look through here, folks. There's an interesting situation going on in the grain markets right now. We have some more hot weather coming in, it looks like, and we have a very interesting pattern in soybeans. I think I've put it up here. Let's just pray that the old gray bank is still working here in the Italian village, and we'll see if I can find it. And then I want to move on to something that I think this is it right here. Yes, there we go. I want to get up the chart for November beans. It's going to be real interesting here, because here again, you're going to have a mixture of a weather market and a technical market. And as you can see here, we've had a pretty big swing now. We've had, a 70-cent swing, 60-cent swing down in the November beans. And then since July the 14th, 6 days ago, we have been backing and filling to the upside with, corrections. We stopped exactly at the 61% retracement at 997. And now that all measures to 1022, and we're trading at 1020 right now. So if this is going to be a weather market, it's going to go blasting through, the 1026 level, and most probably could be getting ready to make new highs. I don't know. But if it stops right here, this weather market is a bogus thing, just like we had with the grain report that we had back on July the 10th. So we're watching the technical parameters here because there should be some pretty strong resistance at the 1022 level in the November beans. The meal is lagging badly. Oil has started to pick up a little bit, but it's still lagging badly. But if this is the weather market, we'll easily get above, the 1022 level today, and that's really what it should do if it's going to be a real weather market, no question about it. We're going to have Norm Winsky as our guest here in a few minutes. He always has some great stuff, and especially when I want to put this last chart up from my good friend Larry Williams that was sent to me this morning. It shows you what's happening with commodities and equities over the past 40 years, 36 years. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have one of our favorite guests on today, Norm Winsky of Astro Trend. Norm, are you there?
Yes, sir, Larry.
I'm going to turn the mic. Good morning to you, my friend. I'm going to turn the mic over to you because I know you've got some important things to talk to us about. So I've got your page 1 posted up there. So why don't you go ahead and start?
Okay, I was on your show on Thursday, July 6th, and we were just ahead of a full moon there on the on the that weekend, Sunday the 9th, and I emphasize that. And here's what I had. I extracted this right out of my July letter that looked for the, let's see, we were looking for the choppy period in the first part of July until around July 11th. And then I expected to get an accelerated trend from about the 11th onward till about this coming weekend. That's what it says here in this paragraph. This is what I had on the screen when I was last on here. Let's go look at the S&P chart and see what happened. So there's the S&P chart. I now am showing the chart here, and there's a green arrow there for the 11th, and you can see the market was kind of sideways choppy until we got the 11th, and it accelerated to the upside.
It sure did.
Okay, so that kind of worked out. Let's see what else we have. This window falls, major change in trend, likely to continue until, and then we have, I'm going to be talking about the big window coming up here this weekend. And let's see, do I do that now? Let's see. Here's some interesting things that are happening right now as of last night. I just sent this out to my subscribers in my nightly update. I stumbled on some interesting mathematics going on in the market right now. So as of last night, there was 3,058 days from the March 6, 2009 low. The S&P 500 high on July 19th, went to a new all-time high, was 2473.83. If you have 3058 divided by Fibonacci 1.236 equals 2474.11, or within 30 cents from that high. That's pretty interesting, huh?
Yep.
So there's a Fibonacci relationship there between the high that was made yesterday and the number of days from the March 6th, 2009 low. The S&P high divided by the NASDAQ composite high is 3.3872, which is, a small fraction from 3819. So there you go. Kind of neat, huh?
Yep.
If the market rallies strongly into the end of the week, that's just another day away. There are two key levels to watch for the S&P 500. I like 2487. That's if we take the decline from the October 2007 high to the March 6, 2009 low, that was 910 points. 2 times 910 is 1820. If you add 1820 to the March 6, 2009 low of 666.79, that's 2486.79. If the S&P manages to get past, so that could be a key level here if we continue to rally. If we get past that level, watch for 2,500. That'd be the next magic number, because that's 50 squared, and we know square numbers are important. Okay, now here's an extra thing. I didn't write it. I just realized that there's a parallel going on here, sort of analogy going on here between, actually, no, that's not true. Okay, never mind. But here's what's happening here this weekend, Larry. We've got a big cluster of things. We have a full moon, and we have Mercury. One of my favorite things are when the planets get to zero latitude. The planets are like the horses on a carousel. They go around and around, but they also go up and down. And so when they get to the middle there, where their highway is called the ecliptic, that's zero latitude, and that seems to be an important balance point, energy point. And when that happens, the markets often change trend then. And we also have a new moon, so it's all lined up. We have a Mercury event lining up with a new moon. Does that ring any past bells for you, Larry?
Oh, yes, May the 19th of 2015 when you were on, and I think it topped within about 5 minutes.
I don't know about 5 minutes. I think it topped that day. I think the Dow Jones was on the 19th. I appreciate your trying to help me here, but
no, you don't need any help, Norm. You do just fine on your own. But it was close. I remember that.
But the Dow Jones topped on the 19th, and the S&P topped overnight in the wee hours. I think 3 a.m. in the wee hours of the 20th. And then that was the high of the year, right?
Yep.
Speaking of, I did mention back here October of 2007. We dropped 910 points. By the way, October the 11th, 2007, we also had one of those alignments where we had a new moon within 1 day of Mercury turning retrograde. Mm-hmm. That was the high day in 2007. So I'm not saying that this is going to be the high day, but I think I think we got an important alignment here of some things, and I think folks might want to pay attention,
Absolutely.
Yep. So anyway, I'm going to move ahead now. Leave the stock market. These are the markets I talked about on the 6th of July. So that's why I'm talking about them now. I went over how I picked them. I don't pick the markets. The planets pick the markets. That's one of the great things about the system. And the planets tell you when and where to look at things, where things are likely to happen. Here's the dollar chart I have on the screen now. And you can see these green arrows correspond to these dates. And I think they all worked out pretty well. There's the 10th. That green arrow first one, and the 12th was a little spiky high there, and then another retest of that high there on the 13th, and then we went down and made a low on the 14th, little pop up for a top on the 17th, and then I don't really have anything until Monday. So I got a big window here for the weekend. Monday is another date for the dollar index, okay?
Norm, we have a question from one of our listeners. You're talking about the weekend. Is any chance? What is the band here between when it could happen? This is Thursday, then we got Friday, Saturday, Sunday, Monday. There's a 5-day window.
If I'm more than one day off, it's more than one day, it's wrong. That's how I measure it.
Okay, but you said the weekend, so you're talking about Thursday, Friday, or Monday?
Well, the actual full moon lands on a Sunday.
Okay.
So I'd be looking for turns.
It's a new moon, isn't it, Norm?
It's a, you're right, it's a new moon. Right?
Yeah, see, we professional astrologers, we watch these. I have the calendar in front of me. That's why I'm saying that.
Oh, okay. Well, I do too, and you asked me, and I had a senior moment. I had a look, to make sure that I spoke correctly.
Okay, no problem.
Yep. So anyway, it's on a Sunday, so you usually would turn. We'll have example. We're going to have some examples here in just a moment where you can see how past the moons affected the markets.
Okay, good.
Yeah. So let's see. You were just talking about T-bonds. Here, Larry, should you trade the notes or trade the bonds? Bonds have more fun, right?
Oh boy, they have more fun. There's no question about that.
That's a little joke there, Larry. You might remember the old TV commercial. Bonds have more fun.
Well, yes, I get the picture.
All right. Anyway, so there's your bonds. I had the 3rd. There's a nice little spike high there, and then we went down, down, down. And look what happened here when we got to about the 10th. The 9th of July, I believe that was a full moon. Yep, that was a full moon, and look what was happening. The bonds are making lower lows right around the full moon there. See that?
Yep.
Now we're going up, up, up again. Now we got the new moon coming up here this weekend. Seems to be a repeating pattern in many of these markets.
And what else we have coming up is a commercial. So why don't you stay with us, and we'll be right back with Norm Winski of Astro Trend.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're talking with Norm Winsky of Astro Trend. I think we're going to switch over to the corn market now.
Yes, sir. We got him by the ears, right, Larry?
I surrender. You got it.
They got some of that Hoosier corn, right?
Oh, gosh. The old rule is the first 2 rows belong to the public. I remember that from when I was a little kid. Anyway, go right ahead, my friend.
Okay, so here's the chart I showed last time on the 6th. I showed how the market topped right one day ahead of a full moon. Full moon was on the 9th. There's the arrow there to the 8th. Is when the corn topped, and then it went down, down, down until we got to the new moon. That was a special new moon at perigee on Friday, June 23rd. That's when I think all the grains bottomed right about then. And then they went up, 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 and now you can see this is really interesting, Larry. So I came on your show on the Thursday the 6th. Just ahead, as you mentioned earlier in the show, we had some, grain reports to do out on Monday. And the fundamental people, I think, were kind of bullish, saying that they thought that.
Yeah.
Am I right? Correct
Oh,
me
yeah. They were so bullish.
I think I heard a line, something that there's only one way these grains can go, and that's up. Something like that, you know? Something about the Midwest is going to turn into a desert. And and there's not going to be any more grains, or something like that, But anyway, they were very bold. Some people, I'm not going to mention any names, were very bullish. And I got on and during the course of the show there on Thursday, one of your people asked, should I be looking at these crop reports, these grain reports and weather reports? I said, no, don't look at that stuff. It'll just confuse you. Just look at the moon. Just look at the cycle, right? And so what happened was, right here, it wasn't real clear on Thursday. When I was on the show, it wasn't real clear. We'd gone up and then we were chopping around. But what happened Friday, these points are like magnets, So what happened on Friday? Then on Friday, here's the update now, starting right here. This chart, on Friday, we had a big up, and then we went into the weekend where we had Sunday, the full moon. And there, if you just did this blindly as a robot, not even thinking, and you went short there on the opening, the Monday's opening for the corn. Okay, you were a little early, 5 cents from there to when it topped out late on Monday, and then it went off the cliff, with the bullish grain reports, You had the bullish grain reports, and it went off the cliff, right?
I think you better up your medication, my friend.
Okay, I will.
Okay, go ahead, Norm.
I'm going to use you as a referral at the drugstore, okay?
Amen.
All right, there we go. So here's my other dates I had right up here. Here's the dates I gave you. The 7th, AC is after the close, 17, 18, and then we have the 24th. That's Monday. Underlined. Guess why? Because there's a full moon over the weekend. So these dates all worked out pretty well. And there you go. There's a low, there was a high, and now we're right here, and it looks not too different than what it did back on Thursday the 6th when it was chopping kind of sideways for a day or two. And we're kind of going sideways now. I hope we get to one extreme, the other. If we do, then you might have a trading opportunity. If it stays in the middle here, don't do anything. right?
Norm, we have a question regarding trading opportunities. What happens if it just stays in this trading range, during the time of the new moon? What will happen?
Well, if it stays in the middle, and if it stays in the middle, like you just said, don't do anything. There's always another opportunity around the corner or another market, right?
Yep, that's for
Never
sure.
Never want to fall in love with any market, right?
That's correct.
Yep. Don't fall in love. Don't get married to any market. This is just merchandise. Think of this like you have a department store and you're buying and selling stuff. Sometimes it's not good, and sometimes it's not a good deal, so you take a pass.
Amen.
There you go. All right, well, move on now, unless you have any questions about corn.
No, we're going to move on to the yellow metal now.
I knew you'd like that, right?
I like
By
the
the way,
gold. This is for sure.
I think I mentioned in the last go around here that corn and gold are astro cousins. There's an astrological relationship between these two markets. On occasion, when the gold and the OJ have been astrologically active, OJ is also a cousin. I would overlay the OJ chart on top of the gold chart, and it was about a 90-95% correlation.
Mm-hmm.
Looking good, feeling good, right?
You got it, Billy Ray. Go ahead.
All right, so there we go, and guess what? Here we go. Here's the 10th, and there in the wee hours of the 10th, just a few hours after the full moon, not even a day, just a few hours. I think the full moon was the night of the 9th, like at 10:30 at night, and then 4 or 5 hours later, there's your low in the gold market. Okay, so this doesn't have to be complicated,
That's for sure.
Don't have to be a rocket scientist.
We have a question. We have a question for one of our listeners, and that is when you come to put an order in, are you relating this to a certain price, or are you just waiting for the certain astro event time to occur? How do you place the order?
That's a great question. First of all, you have to have the right time. So we get into the time window for a change in trend. We like to see the market get to some extreme where, like gold here, it's been going to here over here on the left side. It was going down, down, down until we got into our magic window for the full moon, and then we're looking for a low, and then you would draw your trend lines on here and see what price you might want to put your order in. And so then you have both time and price parameters, and then if those parameters get broken, you get out and cut your loss, right? Otherwise, you got a chance to make some money. So here we go. Gold has been going up, up, up now, and so if it continues up, it's pulled back a little bit here, I think, in the last day or so, right?
Not much, about $6-7. So it's really in a real tight trading range. Yeah.
Well, we want to see some kind of climax. The best thing is if you see like climax, if I could say the word, climax. Like here, you can see the gold was like energetically going down, and it made a little selling climax there at the bottom, right? Mm-hmm. Well, if you're going up, you want to see just the opposite, right? A little buying climax at the top. Right into our window.
I've got another question, Norm. How, as far as longer term astral things, do you use those often, or do you just stay with the things that work the best on a shorter time frame? That's the question.
I look at everything. I cover everything from the moon all out to Pluto.
Mm-hmm.
So you got your long term cycles, but for going on the show here and giving people something they can make money in the next day or two the next few days. Mm-hmm. That's what I try to do here, So those things, the long-term stuff, that stuff doesn't happen that often, So this stuff repeats every month, right?
Yeah, indeed it does.
So I'm trying to show something simple that the people can do, and if they also show them some more sophisticated things when they call for the free class and the free letter,
Okay, we got a question about. From someone in Las Vegas, Larry in Las Vegas. Yeah, we know Larry. Hi, Larry. He's a question about market closing. I don't know what the question. Are you there, Larry?
Yeah. Hi, fellas.
Hey, go ahead, Larry. This is Norm Winsky. Go ahead.
Hello, Norm.
Hi, Larry.
You said something very interesting last year when you were on Larry's show, and you were talking about the stock market closing on Wednesdays. And there isn't a whole lot of information I could find about it. I guess it was closed in 1968 on Wednesdays. Do you remember saying that?
No, sir. Don't remember it, but I do vaguely remember that as a historical fact. I think back in the 60s there, they had a big backlog. Maybe Larry remembers. He was in the business before me.
I don't remember that. I really
They had a
don't.
big backlog where they had to shut down just to catch
Right.
up with the trades,
Hey, stay with us, Larry. We'll be
Okay.
right back after these few words.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, with Larry from Las Vegas and Norm Winsky. Larry, has Norm answered your question?
Well, I was just wondering why it briefly happened, I guess, for less than half a year. And I was just wondering why it happened and why it started.
Keep up with it. They didn't have the computers like we have now, and they couldn't keep up with the business.
Remember the back office problems back then. You're right, Norm.
That's
exactly that's the answer.
That's
yes.
it.
Oh, I see. So it was closed all Wednesday or just Wednesday afternoon early?
I don't know. You could probably
I
Google
believe-
New York Stock Exchange history timeline
Okay.
or something like that, and you could probably find it.
Okay,
We didn't have stock index futures then, so I really wasn't doing very much at that time. But as I recall, it was pretty much a half. They closed like 2 hours early on Wednesday, but you'd have to double check that.
Yeah. Well, thanks, guys.
You bet, Norm.
Okay.
You bet, Larry. Good talking to you, Norm. We have a question.
I enjoy both of you. Thank you.
Well,
Thank
thank you, sir, for the kind words. Norm, next question is, what is your next key turn date in the gold market?
Well, this weekend, full moon.
Okay, because of the
And we
new
got
one.
a big pileup. You might remember I told you this week that we have a huge pileup, everything pointing in the part of the zodiac that says with the big neon Las Vegas sign, Gold. Look at gold.
Okay, makes good sense to me.
That's why I highlighted corn. Corn, gold, OJ. They're all being highlighted right now by the stars.
Mm-hmm. And they're all the same color.
And if you think about it, I haven't talked about those markets. Well, I talk about corn, but I haven't talked about gold in a long time, up till this month.
Yeah. The only time you talk about OJ is when we have the crop report for trading places.
There you go. So how much time do we have now, Larry?
Go ahead. Get your commercial in if you can till the end.
All right. So anyway, I have you can get my letter for free and a free class. And all you have to do is contact me and make sure it's right for you. And you get basically cram a whole trader's college education into 5 hours. You're going to learn some astro, learn advanced Fibonacci, fractals, GAN, all kinds of things, all in about 5 hours. And you get the letter for free. We go through with my letter, and I teach you the different techniques I have in the letter there. You just contact me. It's on the screen there at nwinsky@mparkmail.com, or my Skype is Norm.Winsky.
Norm, thanks for joining us.
There's my phone number on there, too.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.